What is going on, team, and welcome back to another video. In this video I am quickly gonna go over exactly how I determine my drawn liquidity. Now, I have done previous videos on this very matter, but I just keep getting DMs and comments regarding the drawn liquidity, and I understand that a lot of you are struggling to find the drawn liquidity. So in this video I am going to show you exactly what it is that you need to look for, because knowing the correct drawn liquidity is without a doubt the thing that separates profitable traders to non-profitable traders, because it does not really matter what PD array you are using if you know what the drawn liquidity is, right? If you know where price is going, it does not matter if you use an order block or a fair value gap to get there. All that matters is you know where it's going. So let's take a look at it. Actually, before we get into the breakdowns, I want to make something very clear. A lot of people are using the daily or the weekly time frame to determine their bias for the day when they are trading on a 1 minute or a 2 minute time frame, and that just does not make sense. And I completely understand why you are failing your trades when you are using the daily time frame as your main source of figuring out your bias. You see, the daily bias may be bullish, but the 1 minute bias may be bearish. I also refer to the daily bias as a longer term bias, and then use the lower time frames for a shorter term bias. And if you are using a 1 minute, 2 minute, 3 minute, 4 minute, or 5 minute chart, you should not be looking at the daily for your drawn liquidity, but rather the 15 minute or the 1 hour chart, because quite frankly, where price is headed on a daily chart has nothing to do with your 40 tick trade on the 1 minute. So let's look at the trade here I placed today. I was not looking for a lot today because I just really did not like the price action, but this represents pretty well what I look for when I try to determine my drawn liquidity. So as you can see, we had highs here, right? We swept the highs, and what happened then? We failed to continue to go above the highs, right? This is what we call displacement. So we failed to displace above the highs. Okay, what do we do right after? We displace below the low, right? So we failed to displace above the highs, but we successfully displaced below the lows. That's literally all you need. Now, I am going to give you a few more tips and tricks, but that's quite honestly what you need. So in this case, we are failing to displace above a high that we just grabbed liquidity from, and we are successfully displacing below a low, right? Now, for example, here, down here, if we take a look down here, this high got swept. What happened? We continued to displace above it, right? We had consecutive candles that closed above the high, indicating that the drawn liquidity is higher, and in fact it was higher, right? And then we come to here and we failed to displace above, indicating that the draw is lower, and it was in fact lower, right? So it's really simple, and a lot of the time you really don't even need the higher time frame analysis, but of course that will help you. So this was a unicorn model entry, right? We have a breaker block here, and then we have a fair value gap, which is exactly where I placed my entry. Now, I was going for a 1 to 2 on this trade, so about here is where okay, my stop was a bit shorter, and it looks something like this, right? Now, the reason for this is that I did not like the price action today. So my original target was actually this 15-minute BPR, right? Because what is price drawn towards? Liquidity and inefficiencies, right? Especially BPRs. When you have an overlapping fair value gaps like this is something that price is especially drawn towards. And then I noticed that on the 1 minute, we were failing to displace above the high here. So I figured the next target must be this fair value gap or this BPR. So that was my initial target, which, as you can see, got hit. But again, I did not trust the price action today, so I just took my full profits at a 1 to 2. But let me show you what I also look for when I try to determine my bias. So let's go to a 15-minute time frame here. So let's look at a few other things that I look for when determining my lower time frame bias, right? So again, I rarely use the daily time frame for my 1 minute trades, right? Oftentimes I place my entries on the 1 minute time frame, and I don't use the daily time frame to determine in which direction I want to take my trade, right? So for example here, now my higher time frame bias was bullish, but I took a short today, right? And another thing that I look for is violation of PD arrays. So in this case, as soon as we close below this 15-minute BPR, I am very confident that this is where we're going next. Now, this may not seem like a lot, right? from this candle to here, but on the lower time frame, that is more than enough to find an entry. So we closed below a 15-minute BPR, indicating that we are going to go lower, and we did, right? We took out this internal low and also this internal low, right? Then what do we see here? Again, we have a 15-minute gap here, and in order for me to be confident that the next drawn liquidity is here, I would need to see a closure below this 15-minute gap. But did we close below it? No, we did not, right? Again here, how do I know that price is going to keep going up? Well, there's a 15-minute gap here. Did we close below it? No, we didn't. We held this gap, right? So essentially, all you want to be looking for is what gaps are we holding and what gaps are we violating, and what highs are we displacing above and what highs are we failing to displace above. And now you can use this on the daily time frame as well. This is a pretty raw video. I have not looked at any of this data previously, so we'll look at it together. Right here, we violated this gap. Okay, what happened after we violated this gap? My drawn liquidity when we violate a gap like this is the next high or the next PD array. So in this case, as soon as this candle closed here, I am very confident that the next longer term bias is this fair value gap here. And then as soon as we close above this, which we did here, I am very confident that the next drawn liquidity is this high. And what was it? That high. Again, if we go to the 4-hour time frame here, you can see it again happening right here. We have a 4-hour gap here. We close above it. What's the next drawn liquidity? The next high that got taken out. Now, of course, sometimes it can fail, as you can see right here. We have a 4-hour BPR that we close below and then continue higher. But 99% of the time, you will have a very, very, very accurate bias if you look for what PD arrays are we holding and what highs and lows are we displacing above. Okay, so if we are violating bearish PD arrays and holding bullish ones, that indicates that the order flow is bullish. And if we are holding bearish PD arrays and violating bullish ones, that indicates that the order flow is bearish. Same with the highs and lows, right? We have a high here. What do? We get a full candle closure above, indicating that the drawn liquidity is higher. And then we continue to rock it, right? So just for reference, we can do a bit of backtesting on replay mode, and I can show you exactly what I'm talking about. So we'll pick a random point here on the chart. Let's go do this, and then let's go here. This is a 5-minute chart, right? So we have 6:30 here. Now I'm just waiting until I see a violation of a PD array. Now, did we close above this 5-minute gap? Yes, we did, right? Now, what's the next PD array? Well, we have a small fair value gap here. So this is the next drawn liquidity. Let's see what happens. And there we go. Now we close above this one too. Now I would be confident that this swing high is going to get taken out. And it gets taken out, right? Now, what do I need to see in order for me to believe that this is the next draw, or this is the next draw, or that this is the next draw? Well, I would need to see a closure above this gap, right? Let's see if that happens here. Still nothing, right? So because we are holding this gap, I'm not looking for any longs, right? I want to see this gap get inversed, and then I want to look for my entries to go higher. Now right here, let's see if we can displace below this low, or if we cannot. We can, right? So then the draw is probably lower. Now if we go to a 15-minute time frame, we also just violated this PD array, which means that the drawn liquidity is probably lower. Now we have this low here, but we do also have an order block right here. So that would be probably my next drawn liquidity would be this order block here. So if we go to a 2-minute time frame, this was the drawn liquidity, right? We hit the order block. Now I want to see us close below the order block. Does that happen? That does not happen, right? There we had 9:30 opening. Now let's wait and see here. All right, now notice how we closed above this gap here. And again, right here, we closed, but this is getting confusing. Hold on. We closed below this gap here. Where was the next draw? The lows, right? Those got taken out. Now we failed to displace below the lows, and we violate this smaller gap here. Now where's my next drawn liquidity? It's going to be this high or this high, right? Let's see. And in fact, it was. So again, all I'm looking for is what PD arrays are we violating, and are we what are we displacing below, and what are we failing to displace below, right? So again, let's run this over. This is on a 2-minute chart. I have no higher time frame to back this up, right? but I see that we are failing to displace below this, right? We have no candle closures below this low here. Then what happens? We continue to close above a bearish gap, right? When we close above a gap like this is called a violation of that PD array. So we failed to go below the low, and we successfully violate a bearish gap, indicating that the draw is higher. Right? It's really simple, and a lot of people get it wrong all the time, and it ruins their profitability, and it's not very good. So usually what I would do is if we take a look at this hourly, all right, that's unfortunate. Now right here, right, we close above all this hourly gap here, and we get displacement above it, right? So then I would go to a 2-minute time frame, and then because we displaced above a high on the hourly and we violated multiple bullish PD arrays, my 2-minute or shorter term drawn liquidity is going to be higher. What are we displacing below? What are we failing to displace below? What are we displacing above? And what are we failing to displace above? What PD arrays are holding and what PD arrays are not holding? So it is extremely simple once you look at it this way. Let's see what we continue to do from here. We continue to go higher, right? Again, we are holding this big bullish gap here. Let's see if anything happens. We are continue to hold this. So you see right here, this is a lot of hours worth of price action, right? And I got my shorter term bias all because this hourly candle closed above this gap, and it closed above this gap, and it displaced above this high. And what happened? We went up, right? And it's really that simple. Your daily bias accuracy is going to increase so much once you start looking for this. What a lot of people do wrong is that they look for their daily bias on the daily time frame and the weekly time frame and even the monthly time frame, right? And looking at the daily time frame and weekly time frame, there's nothing wrong with that if you are trading on the 4-hour time frame or the 1-hour time frame. But a lot of ICT traders are trading on the 1 to 5 minute time frame, and then it just does not make sense to look for your daily bias on the daily time frame. So actually, you know, start looking for these things on lower time frames like the 15-minute, and then once you get your confirmation on the 15-minute, then you drop to a lower time frame to find your entry, right? So that was actually all I have for you today. This was a pretty raw video, but I hope you enjoyed nonetheless. I see a lot of people really not getting their drawn liquidity right, and it's really messing with their chances of finding profitability, because once you get a high success rate on your daily bias, it's really not that hard to actually be consistent, because it does not have a lot to do with what model you're trading, right? If you're trading a 2022 model, it doesn't matter what model you're using if your daily bias is wrong. So the number one thing that you should focus on is getting your daily bias right. Now, please start looking for the things that I just showed you, because this is the truth. I mean, it doesn't get more clear than this, right? So I hope you enjoyed, and this is probably the last video I am going to do on drawn liquidity, because I am just repeating myself at this point, and that is because this is exactly what I do, okay? To the tick. This is what I do every single day. Now, I trade the 1 minute the most, right? I think 80 to 90% of my trades are executed on the 1 minute time frame. So therefore, I don't really use the daily time frame for my bias. Now, I do look at the daily time frame to kind of give me an idea of where we're going longer term, but that has nothing to do with the direction that I'm trading on that specific day. If I can predict how the next hourly candle closes, that is all I need, because I trade the 1 minute time frame. That is 60 1-minute candles. So start looking for your drawn liquidity on lower time frames, and then look for what I just told you, and then tell me how much it improves your trading. Okay. So yeah, I hope you enjoyed, and I will see you in my next video.